So what are banks? Banks are financial institutions that perform deposit and lending function. Now what do you mean by deposit and yeah, good morning. What do you mean by this deposit and lending functions? Sir, bank is a what is our job? Our job is basically what does the bank do actually? Suppose this is a bank, the understand the deeper meaning of the banking. Bank. Okay? Understand the deeper meaning of the banking. Bank takes money from those who are having the additional surplus. Surplus. Suppose if I am having huge money, okay? So what will I do? I'll keep it with the bank. So then I'll be called as depositor. Depositor. And bank gives money to the ones who are needy. Needy. Okay? So I'll be called as borrower over here. Borrower. So basically bank takes money from those who are having the surplus, additional money, and gives it to those who need it, needy persons, right? And in between what we get is our NII, net interest income. This is our main job, okay? So it takes the deposits and gives does the lending. There are various types of banks in India, and each are responsible to perform different functions. Okay, each function is different. What are the various functions? See this types of banks: central bank, cooperative bank, commercial bank, RRB, and LAB, local area bank. Now we'll be studying each one in details over here. What is the central bank? What is the central bank of in India? Central bank. What is it known as? Central bank. Central bank is not the Central Bank of India which we call. Okay, that is RBI we are talking of. There is also a bank called as Central Bank of India. Okay, so here we are talking of RBI. See, this is the overall structure of banking. Reserve Bank, from Reserve Bank to scheduled banks. Now there are non-scheduled banks also. If you put it this way, this is your scheduled bank. So there is also non-scheduled bank. Non-scheduled bank. It is separately over here. Non-scheduled. Okay. That we generally don't consider it in our overall study pattern because all the banks what we study are scheduled, but there are also non-scheduled banks. So what is the scheduled bank? What is the non-scheduled bank? That we'll study now. Under the scheduled bank, again we have commercial banks and cooperative banks. Now commercial bank means you can have this as private bank as well as public sector bank, both of them. See this, foreign bank, RRB, public sector bank, private sector bank. So these are all commercial banks. So basically you nationalized banks, you as a nationalized bank and the private banks are same. Okay, you nationalized banks and private banks are same. All of them are commercial banks. Okay, all of us are limited by shares. Limited by shares. Okay, that is a commercial bank. Again, understand the names: foreign bank, RRB, public sector bank, and private sector bank. Okay, and then we have cooperative banks. Cooperative banks are of two types: urban cooperative, and then we have state cooperative. Now, state cooperative, after that it comes district cooperative. There are various lower levels over here. State and district, all these are there. But urban means what? These are almost like the private banks. I'm not saying exactly. These don't have the support of the state government. State government gives the support to the state cooperative banks. Okay? So urban and state, that is a cooperative banking. Here we have this foreign, RRB, public sector and private sector. Now this public sector, again, it was earlier divided like this. Now it is gone. So now it is nothing like that. SBI and other banks, nothing. Okay. So it's all have been brought under the same category. But still SBI has an act called as SBI Act 1955. Okay, other banks are having their own, are now nowadays merged. Got it? So understand the main schedule over here. RBI, scheduled banks, commercial banks, cooperative banks. Commercial banks are having four types: foreign, RRB, public sector, private. Cooperative banks two types. That's enough. That much. Only if you remember this much, that's enough. What are scheduled banks? Scheduled banks are those banks which are listed in the second schedule of RBI Act 1934. Okay, second schedule. The scheduled bank consists of those banks which satisfy various parameters under the clause 42 of this act. Which act? 42. This is BR Act also. This 42 is for BR Act. Okay, and this is second schedule. As of 2/8/2019, minimum paid up capital to set up a bank in India is 500 crores, of which promoter should have at least 51% shares. Earlier, paid up requisite was 200 crores. So now minimum capital required for to set up a commercial bank is 500 crores, not 500 which is promoted. Yes. So minimum capital required to set up a commercial bank is 500 crores. Okay. RRBs. Regional rural banks. How many of you are from RRBs? Anybody from RRB over here? Regional rural bank. Anybody is there from RRB? Working in RRB? How many? RRB means what? What is in RRB? How many RRBs are there? There are very few RRBs in India. Okay. What is a RRB? Anybody there? Nobody is there, no? From RRB? All are from nationalized banks only. Anybody from private banks? Any private bank? Anybody is from there? Okay. So what is an RRB? These are special types of commercial banks that provide concessional credit to agriculture and rural sector. See this concessional credit. So the main job name itself says RRB, Regional Rural Bank. So rural, and that also regional. Regional means local area. Okay, we are RRB generally operate in the same state. Generally, I'm saying. Okay. So concessional credit to agriculture and rural sector. RRBs were set up in 1975 and are registered under the RRB Act 1976. Set up in 1975, registered under RRB Act 1976. Okay. RRBs are joint ventures between central government, state government, and commercial bank. So central government holds 50% of the stake, state government holds 15% of the stake, and commercial banks hold the remaining 35%. Okay. Now this commercial bank is generally called as sponsor bank. Sponsor. Okay, sponsor bank. Got it? Commercial bank generally supports one RRB. Now even this structure is being challenged nowadays. Many of the RRBs of the view are of the view, or government is of the view now. Government is saying that the RRB should be brought out from this structure. I think so in next 4-5 years this will be done. RRBs will be brought in as a private bank now. All the RRBs will be combined into 2 to 3. The sponsor bank concept will be gone. State government's stake will be gone. This central government stake will be gone. These will function as the private banks. They have to be brought in. That's what the focus is. Presently, for your JAIIB, presently remember, the government stake is, central government stake is 50%, state government stake is 15%, and commercial bank stake is 35%. That is called as a sponsor bank. Okay. See here, I know one local bank, this RRB over here, Vidarbha Konkan Bank in Maharashtra. It is supported by the sponsor bank is Bank of India over here. Similarly, there can be various RRBs. How many of you know any RRB in which your bank supports? Anyone? Any RRB in which your bank supports? Okay, just type in the comment section. So now LAB, local area bank. Now local area bank, there are very few banks, hardly four to five banks. Okay, introduced in India in 1996. They are organized by private sector. Remember, like RRB we have from nationalized banks, local area banks we have from private sector banks, organized by private sector. So as good as private sector is a this what sponsor bank. Earning profit is the main objective of LAB. Okay, so now earning profit is the main objective of every bank, not only LAB, right? Yeah, MGB, yeah, correct. By CBI, correct. Yes. So earning profit now is a job of every bank. Now, no bank is there whose aim is not to earn profits. LABs are registered under Companies Act 1956. So all of these banks are registered under Companies Act. That's what is the main difference between commercial bank and cooperative bank? Main difference. All the commercial banks are registered under the Companies Act. Okay, all of them are Companies Act. Cooperative banks are not registered under Companies Act. Okay, so local area banks are registered under Companies Act 1956. At present, there are only four LABs, which are all located in South India. These are the names: Coastal Local Area, Coastal Local Capital Local Area, then Krishna Bhumi Samruddhi Local Area, Subhadra Local Area Bank. Okay, these are the four LABs. Nobody will be asking you the names. Okay, I'm just giving you for your information. Even this line won't be asked to you. What do they ask you? Only this part. What is LAB? Who organizes it? Okay, and what is the aim of LAB? Specialized banks. Central banks are introduced. Certain banks are introduced for a specific purpose only. Such banks are called as specialized banks. Means what? Now, specialized banks means they are having a specific purpose. For example, SIDB, Small Industries Development Bank of India. Have you seen the branches of SIDB? How many of you have seen the branches of SIDB? There are very few branches of SIDB. These are in major cities. They don't have branches actually. They have offices. Why? Because they don't do this saving current job, right? They only do the job of lending. That also soft loans. Yeah. Okay. We are in chapter number 1, introduction. Today is the first lecture, no? So, Small Industrial Development Bank of India. What does it do? It provides the loans to the small industries. Okay, small industries. Now, how does it provide the small loan to small industries? Remember, how does this SIDB work? SIDB, EXIM, NABARD, all of them work in single fashion only. How do they work? See this. Have you seen any loan given by SIDB or NABARD or anyone? Does NABARD give you the loan if you are the customer and you go to the branch? Does NABARD give you the loan? No, NABARD doesn't give the loan to the customer directly. NABARD gives the NABARD or SIDB, all of them, they give the soft loan. Now, what is a soft loan? Good morning. What is a soft loan? See, a soft loan means like this. Suppose if SBI gives a loan of 100 rupees, okay? SBI gives a loan of 100 rupees and government announces a subsidy of 25%, let's say. SBI gives a loan of 100 rupees and government announces the loan of the subsidy of 25%. So this 25% subsidy is given by either SIDB or NABARD or EXIM depending on the structure of the loan. Okay. If it is for industries, it is given by SIDB. If it is for this rural, it is given by NABARD. And government fixes the agency also. So out of this 100, 75 rupees will be brought in by the customer, means paid by the customer, and 25 rupees will be paid by the SIDB. Okay, means government will pay through SIDB. So that's why it's called a specialized bank. So SIDB, NABARD, all these banks give the loans, they repay the loans of the customer. They don't give the direct loans. Okay, look at this, same structure. 75% is by the bank, 25% is by the customer. See this. Whenever you give the loan to any customer, in your bank also, suppose if you sanction a term loan to any customer, so 75% is given by the bank, 25% is given by the customer. Out of this 25%, understand this now, this complete 25% is not given by this SIDB. Okay, so out of this 25%, again they break it up into two parts. So that is 20% is given by this SIDB or anyone, and 5% is brought in by the customer. So that is what the soft loan system is. Okay. So remember, these all banks give the soft loan. They never give the hard loan. Hard loan like means which we give. Small finance banks. Small finance banks here. As the name suggests, this type of banks look after the micro industries, small farmers, and the unorganized sector of the society by providing them loans and financial assistance. So, this small finance, so small bank, small industries, small farmers, unorganized sector, this is their job. But have you seen the small finance banks right now? I'll give you these names. See this example: AU Small Finance, Equitas Small Finance, Janus Small Finance. These all banks are advertising so heavily, right? Have you seen the advertisements of these banks now? These have come up like the private banks. So they give smaller loans, but they are advertising heavily. Why? Because smaller loans are in main focus nowadays. Everyone wants smaller loans because have you seen the total percentage of loans given in India? Number wise, more than 90% of the loans are less than 1 lakh. More than 90% of the loans are less than 1 lakh by numbers. Okay. That's why the small finance banks have come up. The minimum paid up voting equity capital for small finance banks shall be 200 crores, except for such small finance banks which are converted from UCBs. UCBs means urban cooperative banks. Okay, so those banks which are converted from UCBs will have a different capital. Otherwise, any small finance bank will require a minimum capital of 200 crores. Okay. These are the examples: AU Small Finance, Equity, Equitas, and Jana. There are many as such. You have it nowadays. Bandhan. Bandhan is not small finance, I think so. No, it's not small finance. These are small finance banks. Payment banks, the newly introduced form of banking. See this, we always get confused between payment banks and small finance banks. Small finance banks have a physical branch, okay, physical branch. They have a branch like us, but payment banks, they don't have a branches like us that much. Although RBI has allowed them now. Even these payment banks are allowed to open the branches now. A newly introduced form of banking, the payment bank has been conceptualized by RBI. People with an account in payment banks can only deposit an amount up to rupees 2 lakh. So up to 2 lakh you can deposit it in the payment banks. Cannot apply for loans or credit cards under this account. So loans or credit cards are not given under by payment banks. It needs to have a minimum capital of, what is this amount? Look at this, 1, 2, 3, 100 crores. Correct? 100 crores. This is crores. Correct. 100 crores. Minimum initial contribution of the promoter to the payment bank to a paid up equity capital shall be at least be 40% for the first 5 years from the commencement of the business. So basically, this question which will be asked to you is only this 200. Okay, 2 lakh. So maximum deposit which can be made up to 2 lakhs. And the second question will be of this 100 crores. It needs to have a minimum capital of 100 crores. They won't be asking you this 40% stake. Okay, so 2 lakh and 100 crores. Remember this much only. Which are the payment banks? Airtel Payment Bank, India Post Payment Bank, Jio Payment Banks. These are all the payment banks. What is the minimum deposit in the payment banks? Do you know? minimum deposit amount in the payment banks. Like our bank, we have MAB, monthly average balance, right? We have MAB what? Some banks have 3,000, some banks have 5,000, some banks have 10,000. Similarly, in payment banks, what is the balance which we need to give? MAB you can call it. It is rupees 200 only. 200. Do you know? 200 is the minimum balance. And it gives all the facilities of your normal saving current FD. Okay? So these payment banks are means nowadays coming up in huge competition to you guys, huh? Because all the subsidies of the government can be transferred through them. Imagine post office has more branches than the banks in India, isn't it? Post office has many branches. Tomorrow, if post office converts all its branches to the payment banks, what will happen? Nowadays, also we are having almost all the offices, 70 to 80% in the cities. We have all the payment banks, post payment banks. Tomorrow, if post says all my offices will be payment banks, all my offices, in that case, what will happen? It will have such a huge network. So these are the main competition to the all our nationalized banks and the private banks now. The money received as deposits can be invested into secure government securities only in the form of SLR. Now, this post payment banks are in the form of SLR. The this must amount to 75% of the demand deposit. The balance 25% is to be placed as time deposits with other scheduled commercial banks. So this is a structure. This won't be asked to you. Huh? That much. These details are not asked. They only ask you about this maximum deposit and this 100 crores. Payment banks will be permitted to make personal payments and receive cross-border remittances on current account. So this is an important point. Personal payments. If I have to make payment to somebody, like a normal bank, I'll be making the payment. Okay. It can issue debit cards. They provide loans through partner banks. Now look at this. Here, what have we said? They are not allowed to give any loans as such. Okay. So loans are not given. Cannot apply for loans or credit cards under this account. Look at this. Okay. So no loans are allowed, but they have found out a way out of this. They provide the loan through partner banks. So what does it mean? Tomorrow, if Post wants to distribute the loans, it can tie up with SBI. It can tie up with private bank, HDFC bank, anyone it can tie up. Okay. So it can tie up and then give the loans. Although it itself can't give the loans, Geo Bank, Geo Payment Banks, it can tie up with any other bank. Okay. Neo banks. These are the new types of banks. Neo banks. This many of you might not have heard about neo banks. Have you heard about neo banks? How many of you have heard about neo banks? Neo banking system. Have you heard about it? Neo banking system. Neo. These are the new types of banks. What are these? Neo banks are digital only bank platforms that operate solely online. See this. These are digital only that operate only online. Simply put, they do not have physical presence. Okay? No physical banking, only online banking. Now you'll say, how is this possible? It is possible today. Have you seen the PhonePe branch? Anyone has seen the PhonePe branch? PhonePe. No branch. But then also it is giving the loans. PhonePe is giving loans to the merchants where it is installed. Okay. Similarly, Paytm is also giving the loans. Okay. So that's why these are all neo banks. For customers, transactions in the traditional banks could require a lot of time and effort. Neobanks promise a seamless online experience by bringing an experiential digital layer on the top of the traditional banking. See, this the digital layer is brought. Digital means what? These banks will be having the account with some bank like SBI or PNB or any other bank or HDFC, ICICI. They'll be having the accounts with those banks. Suppose if I am the customer, I open an account with PhonePe. So PhonePe can't give me the branch account, but PhonePe can tie up with HDFC Bank. And then I'll be having the HDFC Bank account under the name of PhonePe. Okay, that is one layer is brought in. Okay, so that much is enough for you. Due to the tech-driven nature, customers can create accounts by themselves and use their offerings hassle-free. As the RBI does not permit fully digital banking establishments yet, neobanks in country use partnerships with physical banks to deliver some of their key services. So they partner with the physical banks. Okay. So everyone understand what are neobanks? In exam, they'll ask you only this question on what are neobanks. Neobanks are digital only banking platforms that operate solely online. They don't have a physical branch. Okay. Got it? See, these are the new banking concepts which you have seen. Many of us have not seen this neobanks. Many of us have not don't know about this payment banks that much. Many of us don't know about the small finance bank that much, right? Because our job is only to go there, sit, do the clearing, do the transfer, and home, right? But banking is changing heavily. Everyone understand banking is not the same which was there. Your seniors have told you, your parents have told you. Many of us parents were in banking or known persons were in banking, so they have told you banking job is the best best job. Go there 10:30, then at 4:30 bank is over. Do the regular fund transfer activities, do the regular cash activities, and home. That is the best job. But nowadays banking job is not the best job because banking has competitions from various sectors now. Earlier it was a separate thing. Earlier bank was the only bank, only institution which was giving loans. Okay. Earlier banking system was, do you know one banking system which was followed in 1980s and 90s when our not even parents, our old parents, grandfathers were working. They followed the system called as 363. Do you know what is 363 system? 363. That was the banking system which was followed throughout India at that time. Do you know what is 363 system? How many of you know 363 system in banking? That was followed by our older generation, earlier generation, they followed it. Still in some of the banks, not now, it's not possible now. In some village bank it might be, but not now. 363 system means you take the deposit at 3%, deposit at 3%, you give the loans at 6%, and you go home by 3 p.m. Home by 3 p.m. This was a 363 system. Deposit at 3%, loans at 6%, and home at by 3 p.m. This was a 363 system which was followed in the nationalized banks. Now, can you imagine going home at 3 p.m.? How many of you can imagine also, not even going? How many of you can even think of going at 3 p.m.? Not possible at all. Today, 7 p.m., going at 7 p.m. is also a privilege, isn't it? So, what is the income? From where do we get the maximum income nowadays in banking? In banking, we get the maximum income nowadays. See this retail banking, 62%. Remaining everyone is giving lesser income. Wholesale banking, wholesale means corporate. Corporate banking is giving around 20 to 25%. Wealth management around 15%. Retail banking is the main banking which gives the income to all the banks, means major source of income now, and the risk is less. Why risk is less? Yesterday I explained you. If I have 1 crore, then in corporate banking I can give it to only one customer. Whereas in retail banking I can give it to 1 lakh into 100, right? So I'll be distributing it to 100 customers. So now the NPS will be less, risk is less, right? So what is the retail banking segment? Now we come to retail banking. Up till now we have studied all the banking segments. What all are the banks? Various types of bankings. Retail banking is the largest earning contributor. It is a segment most people are familiar with as it includes operations that occur in the bank's branches. Products involved in the retail banking include deposit, credit cards, and mortgages. So, retail mortgages means loans basically. Okay, mortgage means your loan. We give mortgage as well as non-mortgage loans also, personal loans, or we call it unsecured loans. So, largest earning contributor people are familiar with as it this includes the operations that occur in the bank's branch. So suppose if I tell you what is PNB, what is SBI. So suppose if I ask you any question, what is SBI? We all know SBI from the retail branches. Have you seen the corporate office of SBI? Has any customer seen the corporate office of SBI? No. So retail banking segment is the face of the bank. Face. Okay. This segment is also known as personal banking as it serves individuals. However, it is also targeted towards small commercial clients. Commercial means who? Proprietorship, partnership, private limited. These accounts are also opened under retail banking, right? We don't give the loans to Reliance Ambani in retail banking, right? Reliance company, Tata company, we give the loans under corporate banking. But retail banking is a major segment nowadays. Okay. Revenue from retail bank is split into interest and non-interest. Now, what do you mean by interest and non-interest? Say this. Interest income means that income. Say this. Interest income means that income which we get it from the loans. Non-interest means that income which we get it from TPB, third party. Insurance, mutual fund, demat. We call ourselves agent over here, right? So that is my interest income and non-interest. Interest means basically loans. Loans minus deposits. So net interest income for accounts for approximately 70% of the revenue. So net interest income, that is the bread and butter of your bank. Interest income is the bread and butter as of now. So 70% of the income comes from the interest part. 30% comes from the non-interest part. But I'll tell you, the banks are now focusing more on non-interest rather than interest. Banks are now focusing more on insurance, mutual fund, third-party products, right? You all guys might be having the targets for this third-party products that much heavily, right? Because why? These are safe. We are acting as agents over there. It is calculated by taking the interest collected from the mortgage and credit cards and subtracting the interest paid on the deposits, right? Taking the interest from the loans and getting income from the loans and subtracting the or paying to the depositors. Non-interest income contributes around 30% of the retail banking segment, right? Non-interest means what? Mutual fund, insurance, demat, all these are non-interest incomes. Okay. So what do you mean by NII? NII is called as a spread. Spread means what? Or also we call it as a margin. One and the same thing. See this. NII spread margin. What is NII? So NII means what? Loan minus deposit. The interest difference between loans and deposit is known as our NII. What is NIM? These terms you will be having in chapter number 3 or 4. This branch profitability chapter. There you will be having this. NIM equals to NII upon yielding assets. Yielding means what? Those loans which are not NPA. So NIM equals to NII upon not NPA loans. NPA loans are of no use to us. Evolution of retail banking. The evolution of retail banking in India can be traced back to the time of foreign banks. In fact, when was the first bank formed? First bank was formed in 1774, Bank of Hindustan. Okay. First bank was formed in 1774, Bank of Hindustan. Okay. The conventional banking business was carried out on the public sector banks on a more generalized approach, and there wasn't any specific demarcation. Means what? See this. Earlier we didn't have retail banks. All your nationalized banks, call it Central Bank, call it this Bank of Baroda, call it in except that SBI. SBI was also earlier a different bank. SBI's name was what? Anyone knows? What was the name of SBI before? What was the name of SBI? Anyone knows? Yeah, correct. It was in Imperial Bank. Correct. It was called as Imperial Bank. There is a long history to this Imperial Bank also. Imperial Bank was also not the first bank, not the bank directly. It was merged. Three banks were merged. Bank of Madras, Bank of Bengal, and there was one bank, Mumbai, I think so. Three banks were merged to form the Imperial Bank. So that's a long history. We are not concerned with it. Okay. So coming back, the conventional banking business was carried out on public sector banks on a more generalized approach, and there wasn't any specific demarcation. Customer and industry segmentation was adopted in the business plan of the bank. Were no attempts to offer products and services on the specific customer segments. Now, understand one simple logic over here. Before, you can call it 1950s also, before the nationalization of the banks, all the banks of all our nationalized banks were existing at that time, but they gave loans to only industries. They took deposits from the customers but gave loans to the industries. Retail loans were not given. Then they were nationalized by in 1960s. At that time there were two types of nationalizations. One was in 1960s and second one was in 1980s. Okay, so these banks were nationalized. Then the loans started being given to this retail customers also. The entry of private sector banks in 1990s created a new approach in retail banking. They had the advantage of technology right from the start. From day one, these private sector banks had technology. Online banking was from the day one in this private sector banks. These banks had a clear mind with the retail banking and aggressively strategized for creating new markets for the retail part. So these banks, all these private sector banks, when they came in with the state of art technology. State of art means latest technology. So that's why you see in 1994, yeah, HDFC Bank was first opened as a branch. ICICI Bank also. So they opened it and directly started. They removed the concept of DD as such directly. They directly started their online banking. So old private sector and new private sector. These are the two types of private sector banks. Old means what? KVB, Karnataka Bank, and Federal Bank is also one of the old private sector banks. New banks were formed are these HDFC, ICICI, then IndusInd. Many new banks were formed. Okay. So that's why were these private sector banks formed? They were formed because of this Narsimham Committee. Narsimham Committee in 1991 gave the important ruling. Okay, yeah, presidency banks, correct. Three presidency banks were there. They were then combined as a imperial bank. So Narsimham Committee in 1991, that was the main reason why these private sector banks came in. So Narsimham Committee gave the idea that there should be a new age banks which will cater to the new changes, because in 1991 we opened this economy, right? Manmohan Singh was the finance minister, Narasimha Rao government that opened the economy in 1991. Because of that, new age banks were needed. So these private sector banks were brought in. Prerequisites for the success of the retail banking means, what is the requirement? Suppose if any retail bank has to succeed, what is required in that? Presence of efficient delivery mechanism. What do you mean by delivery mechanism? We must reach to the customers' needs and preferences, channel innovation. Now, what I mean by all these terms? See this. We must reach to the customers in a better way. How do you reach to the customers in a better way? Reach to the customers means that we must have various delivery channels. We should have, what are the various delivery channels? Yesterday we saw it. One is branch, second is internet, third is app, fourth is phone banking, fifth is mobile banking, right? There are various ways. Nowadays, social media banking has also come up. So we must understand the customer's needs. And then preferential channel innovation. Innovation means latest technology should be used. Direct banking, the fastest growing and the dominant channel of the future. Direct banking means branches. During the COVID time, all the banks were focusing on online banking. But after COVID, now again the branch banking has survived. And branch banking is coming up again. Product appropriateness means whatever is needed by that customer, give that only. Don't try to force your product on that customer. Means what? Suppose let's say I am a customer, I come to your branch for getting the loans because I am not having some money for some project. And what are you trying to sell to me? You're trying to sell to me insurance, current account, FD. I'll tell you, sir, I don't have money. That's why I'm coming for the loan. Why are you selling me FDs? Because if I would have had money, I wouldn't have come to you for loans, right? Pricing means rate of interest. The rate of interest should be appropriate and it should be affordable to the customer. Nowadays, the rate of interest of the loans are made free by the RBI. You can decide your own rate of interest. But the problem is, if you keep high rate of interest, no customer will come to your bank, right? Because today is the internet age. Scoring models for assessing credit worthiness. Scoring models means what? CIBIL. CIBIL is just one example. There are various other companies. There are 4 to 5 companies, okay? Equifax, CIBIL, TransUnion, okay? Dun & Bradstreet. There are various companies. Many banks are using different this scoring methods. Okay, which is which company do you use for scoring? So CIBIL score, yesterday we discussed this. Maximum CIBIL score is 900, minimum is 300, good one is 700. Now this CIBIL is being replaced by account aggregator in coming years. CIBIL will be replaced by account aggregator because CIBIL checks only the loan history. Experian, correct. Experian is there. CRIF Highmark, correct. Very good. Experian, CRIF Highmark, correct. Yeah. So now the problem over here is, everyone understand, this loan, this CIBIL has a basic problem. What problem does CIBIL have? CIBIL checks only the loan details. If I have repaid the loan correctly, but CIBIL does not check what am I doing other things other than loan. See here, when I'm taking the loan, I'm a normal family. If I'll be having this loan I'm taking, but I'll be having insurance also. I'll be having mutual funds also. I'll be investing also. I'll be paying my electricity bills also. So all these things are checked under account aggregator now. So account aggregator is a new concept which has come in. It will be replacing CIBIL in some years. Consumer protection environment means the consumer needs to be the rights of the consumers need to be protected. Basically, we are talking of charges and the time delays. Charges and the time delays. Suppose if I take huge time for account opening and a customer loses something, and because of my mistake the account opening is delayed, then the bank has to suffer. Okay. What are the challenges? What are the problems in this retail banking? Consumer protection and pricing. Now this is a major challenge now. Consumer protection. Although it's an advantage also, but it's a challenge also. Why? You make a single mistake and tomorrow the customer immediately goes to your ombudsman or it goes to the consumer protection nowadays. Because everything is made online nowadays. Customer doesn't have to visit any branch of ombudsman or consumer protection. He or she can just put the complaint online. So these are the challenges. That's why you have to be very precautious. Inadequacy of MIS. MIS means Management Information System. If you don't have the MIS, you can't work today in banking. Your banks won't be able to function at all. Okay? Understanding the KYC AML means KYC AML is a major issue nowadays in banking. Here, many of the banks have been punished or penalized by the RBI because of this AML and KYC issues. If you don't follow the KYC issues, you will be facing here. What is this KYC and AML? KYC is know your customer. AML is anti-money laundering. These two are separate parts. Okay. But if you don't do the KYC properly, you will be facing the AML issues. Money laundering. What is money laundering? Money laundering means taking the white money and putting it into the black business, or taking the black money and putting it into the white business. Vice versa. Both the things are there in AML. Generally, terrorist funding and everything comes under AML. Managing the risk. That is also important. Risk means how do you manage the risk? Managing the risk means the difference between the loans and the deposits, the interest rate difference. That is to be managed properly. Effects of disruptive new technologies. Disruptive means changing technologies. The example which we saw just now are the neobanks. Disruptive. They are changing the entire banking scenario. Disruptive technologies. Okay. Because of that, what is happening? Neobanks, there are no physical branches. They are tying up with the present banks and then doing the business, continuing the growth. So huge competition right now in banking. The customer base is limited. Generally, customer base is limited to city areas. And there is a huge competition for the same customer. So these are the major challenges. What is the future? Rise of young Indian professional. So because of this rise, what has happened? New banks have come in. New banks means like what is this payment banks? It is a new bank, new age bank, phone pay, new age bank, neo banks, new age banks. So rise of young Indian professionals. These have come up as a startup, but now they are venturing into the financial field. Growth as an economic superpower. So India will grow as an economic superpower if the banking and the finance system grows heavily in India. Increasing purchasing power of the middle class because of the loans and because of this UPI. Here, purchasing power will be increased when there's a flow of money in the economy. As money flows more in the economy, the purchasing power of the individual grows. Now, I'll give you a simple example. Because of this UPI, what has happened? Even if you have to make a payment of 2 rupees or 5 rupees or 10 rupees, people are now making the payment through UPI. So even if you make a payment of 5 rupees through UPI, it means, understand the difference, what is happening. It means it is coming into the banking system. 2 rupees are flowing through the banking system. So once the money flows through the banking system, it is added into the economy and GDP. Earlier the problem was, in India money was huge, but that was all cash. Nowadays that cash is gone. Reduced. I don't say gone, reduced. Okay. Financial market reforms, right? So these reforms will take over the entire banking system now, like this UPI, or today it is UPI, tomorrow it will be something else. Nowadays we are coming up with these concepts. What is this? What is this e-rupee? Have you seen this e-rupee concept? E-rupee is a new rupee brought in by RBI. It is a cryptocurrency brought in by RBI. Okay. So e-rupee is a new type of currency which is brought in by RBI. After few years, I don't think so cash will be there. Everything will be e-rupee at that time. Okay. Digital currency, correct? CBDC. It is same as that of the Bitcoin. Only the difference is Bitcoin is issued by the private party and this e-rupee is issued by RBI. So there is a trustworthiness in RBI. In private parties, we don't trust. So that is the only difference between this other cryptos and e-rupee. Okay. So these all concepts which are going to change the entire banking space now. Business models. The business model in retail banking show interesting revolutions across the types. The models adopted by the banks vary among the public sector, private sector, and the foreign banks. So, what are the various business models? See here. One is SBO, second is departmental, and third is integrated approach. Now, what is this? Say this SBO. SBO can be defined as a profit center with a focus on product offering and a market segment. See this. It means what? Profit center, strategic business unit. The full name is strategic business unit, full form. Okay. SBO means, what do you mean by strategic business unit? It is a clear focus. We need to have income from each and every department. Suppose let's say I'm in the clearing department. I'm in the cash department. So each department will be called as SBU. And they'll say that each department should earn the income. How will you earn the income? Clearing will say, how will I earn the income? Because I don't sell the loans. Because loan income is earned through this loans only. But there are certain other ways also. They can pass on the leads to the account opening, and these leads will give them the income, that department. Okay. So SBUs are profit centers with a focus on the product offering and the market segment. And SBU can be a business unit of a large corporation, or it can be a unit in itself, business in itself. So it can be like this cash, clearing, transfer. These can be separate SBUs, or even the branch can be an SBU. The demarcation as a SBO is more by MBO. Now this question comes to an exam. Two words will come to an exam in RBWM. One is SBO, second is MBO, management by objectives. What is MBO? Management by objectives means first the objective is set and then the branch is run. Wherein the business model is dealt as a modular strategy for achieving targeted profits with the provision to knock down the module. Now, targeted profits. First, the target is set. We have to earn 10% income this time. Additional income. So, this 10% if you have to earn, then it is passed on to the employee. You sell insurance, you sell mutual fund, you sell this, you sell that. But 10% income is required. So, that is MBO, management by objective. First, the objective is decided. First, the target is decided. And then the branches work or banks work towards that target. That is basically MBO. Okay. So, for achieving targeted profits and with the provision of provision to knock down the module. What do you mean by knock down the module? If my target is completed, I can close that 10% or whatever module I have started, and I can shift it to some other module. Okay. Departmental approach. This approach segregates the functions of the organization into separate departments: accounting, finance, marketing. In our bank, we have cash, clearing, transfer. These are departments. We call ourselves, I am working in clearing department. I am working in cash department. I am working in fund transfer. I am working in account opening. So these are all departmental approach. Nowadays, departmental approach is fading. Okay. All our banks are shifting to the SBU approach, strategic business unit. So various departments are there, and every department has its own manager and chain of command, right? So every clearing will have their own chain of command. Chain of command means what? Senior person. Public sector banks in India generally have adopted the departmental approach in their retail banking. So generally in all our public sector banks, we have departmental. Last one is integrated. Integrated approach is used in small businesses. Small. It is a flat structure. It combines socio-economic aspects and adopts a cohesive approach to tackle the problem. Means what? What are these big words? Cohesive. Cohesive means combined approach. All the persons in the branch work towards one goal. That is known as cohesion. So these are used in smaller businesses only. Big businesses or big banks can't use this integrated approach. They are used in small banks. Okay. It is assumed that having a unified business would reduce the risk. Unified means all of them are working towards one goal. Means what? For example, suppose if you go in any small finance bank or if you go in any small bank, what do? Every person does every job. That person does the clearing also, transfer also, cash also. That person does the account opening also. So that is known as integrated approach. Every job is done by the same person. Okay. Now let's come to certain questions. The loan amount which is based upon the market value of the property and could range from dash of the value of the property. So loan amount generally for home loans, let's say. Home loans can range from up to what range? 50%, 60%, 70% or 90%. What is the maximum loan we can give on any home loan? Maximum. How much loan do you give maximum on any home loan? 60? Nowadays 60 is not there. Nowadays we are at 90%. Okay, 85 to 90%. 85 to 90%. Always remember, home loans have become a huge segment now. 60% we generally don't give. 80 is not there. Means 80 to 90. See here, it depends on bank to bank. Means see here, the range is like this 80 to 90 generally. But general rule followed in bank is maximum you can give the loan up to 90%. Maximum. Below 90%, the bank has to decide on their own. RBI doesn't interfere in that. If any bank wants to give 50% only loan, 50%, then it can give. But the problem is customer won't come to that bank then, right? You are having the house of let's say 150 lakhs and you are giving the loan only of 25 lakhs. Will you go to that bank? Never. Nowadays we have increased the limit from 80% to 90%. Okay? Depending on bank to bank.